Pacer ETFs President Shaun O'Hara is in the very slim 5% who say the Fed will stay put. You say no interest rate hike. Listen, we love our contrarians. Why?
I just don't see the overall inflation growing. I don't see GDP growth like it should be. I don't see wage growth growing like it should be.
PPI look relatively stronger.
Listen, they've been saying for what now? 8 cycles in a row they're going to raise. I'll believe it when I see it. I don't think they want to do it the last month of the Obama administration and then into the new one. I think they'll wait. We're
looking at record highs here. Are you selling? Are you buying?
We're always buying in the ETF world. We are a long-only investment manager. So what would we do as an alternative to worrying about interest rates going up? Buy stocks, global stocks that pay high dividends. We have a global ETF, PGHD, 4.2% dividend, all pretty much household names, all huge mega cap companies with free cash flow.
Okay, we're looking at this chart for Pacer Global High Dividend ETF. So you say if they don't raise rates in December, and there might be a slight market gyration or shock at the moment, you're protected either way in this thing. What are the names? We've got Boeing, we've got Qualcomm, some of these
Qualcomm's a great name,
names.
$10 billion worth of free cash flow. They're the player in the telecom world where you have this big war going on content and delivery between Verizon and AT&T and who's acquiring who. I'll tell you the other thing to think about on interest rates going up is bond investors are going to get hurt. In the last 10 days, we've saw $1 trillion worth of bond value disappear on a 60 basis point move in Treasuries. So if you're an income investor, I think you need to look hard at where you are and say, why don't I buy high dividend stocks that are quality? They can actually go up in value as opposed to owning bonds where if they raise rates, my bonds are going to go down in value.